Well, hello everyone, and welcome back to the Currency Game. I hope you're having a great day. This is morning where I'm at. It's about to be afternoon, but so I don't know what time you might watch this, but I hope you're having a great day so far. But I wanted to go over. So yesterday, let me go to it real quick. Hold on for a second. All right. So yesterday, Robinhood launched a tokenized stock, a way to trade tokenized stock. So basically, this is like crypto version of stocks. So you can trade it 24 hours a day, just like you can with crypto. The only difference that I've seen in this is, so it's basically launches stock tokens, reveals layer 2 blockchain, expands crypto suite in EU, Europe, and US with perpetual futures and staking. The only thing that I saw that was a little different from like if you were trading on Coinbase is that you cannot transfer it to a wallet, like a crypto wallet. So that's one of the things that if you're a crypto trader and you like to be able to move things around, currently you would not be able to do that with Robinhood token, with the tokenized stock and platform that they have, that they just launched yesterday. So where I actually got this, I found out about what they're using to do this is called Arbitrum, and so that's a crypto or a blockchain that I've picked up on Coinbase that I've been paying attention to, and this is what I'm going to go over today as far as how I'm using what they're doing to trade crypto. And I probably will test out their platform as far as the tokenized stock and see if I like the tool. See if it's something I want to participate in. Don't know when I'm gonna do that. Might try it out next week or so. And I did ask ChatGPT, because the whole thing about trading stock is that kept a lot of people out as a day trader because, for trading, being a day trader of stock, you have to have at least $25,000 to even get started as a day trader. That's what made crypto so inviting to a lot of people, because you didn't have to have that much money. You could day trade as much as you wanted to, 24 hours a day, evenings, weekends, it didn't matter, holidays, whatever. And you could be pretty much anywhere in the world. And that was one of the things that caught my attention with crypto. And that's why I still like crypto. Now, it can be pros and cons to that, but yeah, so you might want to check them out. The tokenized stock on Robinhood. And I think it's not only going to be just stock, it's going to be like they're going to tokenize real estate, like private companies. So it will be more than just stock, from my understanding. And of course, you have crypto. So the only thing is with the tokenized items, you can't move them. So you have to basically cash out. And that was the problem I had when I first got into crypto. I first bought my crypto on Coinbase, which was Ethereum. And then I actually tried Robinhood crypto when they introduced it. And I thought I could do the same thing as I would be able to in on Coinbase, and I had to cash out. So basically, I didn't like that because I was using at that time like Ethereum to get into these private sales, of new cryptos, all right? And I wanted to move that Ethereum over, the Ethereum that had gained on Robinhood, and I couldn't. I had to cash out, and that means that the price had already risen. I had to buy more, and yeah. So, but anyway, so let's go into the chart, and I'm actually in the trade right now, and see how far I can get out of it. How much can I get out of it, and we'll take it from there. Okay, so this is Arbitrum. It is a blockchain that Coinbase, Robinhood is using to have these tokenized assets. So right now you're looking at the 4-hour chart. I did just like what I showed you guys yesterday, as far as I go top down, goes from the monthly all the way down to the 15-minute, and I set my chart up, and that allows me to set alerts in the very distinct spots on the chart so that I can have a greater probability of winning trades with the least amount of risk, right? Because the way I set the chart up, it might not be conducive to everybody who might not like it, but it works for me. It works for me as far as when to enter, when to exit, and to have the least amount of risk. So like if I go into the 15-minute on this trade particularly, so this one's like 2.03 risk. I'm okay with that. So it's like 2%. Pretty much. It's not under 2%, but it's right at it, pretty much. So I'm okay with that. So this one, I just came in right as it started going back up. If I were to open this up, right? So like right in here, I was putting alerts, right? As they were going off, and then it went back up and came back down. Thankfully, it did not go past my what do you call it? My stop loss, or the area that I wanted to come out of. So, and we're here now, and because this is another reason. So now that I'm showing you guys this, I can get rid of some stuff. So I can get rid of this, and I can get rid of this. So I set things up. Remember I said in the other video that you won't hardly tweak the higher time frame trend lines and stuff like that, but the lower time frames you probably will have to tweak them as things are changing. So I can get rid of that. So now I'm just working off of this parallel trend line right here, right? So it goes all the way down quite a bit, right, to down here. So it could be on its way out because we are getting close to a rejection area. I was hoping that we could get at least up to here, around the 23%, and maybe we can. So I'm just going to keep my stop loss where it's at. I'm not going to change it. I'm willing to take the risk of losing 2% in exchange for potentially a gain of 10 to 13%. So I'm going to just keep an eye on it. If I see it kind of go below this area right here, let me show you what I'm saying. If I see it go below this area right in here, I probably might go ahead and come out. Like, it might try to liquidate that a little bit. I'm going to see if it's just going to liquidate and turn back around. But if it's doing more than liquidation, then I probably just go ahead and come out even before it gets to my stop area. Oh my God, I didn't mean to do that. What happened? Okay. I touched too many things at the same time. I was trying to delete this mark that I put up there. So I just got some alerts going right below that area that I just marked and right above to see if it's going to hit. And I think I do have an alert on this right here. So Bitcoin is going up to 108. So we might have a good chance of this going up still. Because usually when Bitcoin is rising and you're in something, there's a chance that it'll still go up. And this is where I was not in the game of just holding a bunch of coins like I probably would have been in 2019 or 2020. So Swift is also, I gotta check Swift and Bitcoin. And gosh, what was I about to say? Yeah, when I started seeing a shift, I was like, okay, the whole game, holding coins game is probably not the way to be now. That worked for back in 2019, 2020, when there was this fascination with crypto, and that was the wave we were in. But now I feel like we're in a totally different wave. So the wave now I think is more about, hey, crypto has been proven as a true class of assets, and Bitcoin made it so. When Bitcoin became a part of the stock exchange, people can get it into their ETFs. Then that changed the game. So when you see a pivot happen, you gotta know you gotta pivot. And my pivot was, okay, holding a bunch of tokens is not it. Trading, compound trading is where the money is at. So the people who are holding and watching their stuff go down for these altcoins are probably feeling like they're in a losing game, because they are in a losing game. The winning game is compound trading, and the reason why is because things like Robinhood having tokenized assets, that means that you're putting way more items for people to invest in, for people to trade. So that means that people are going to be in and out, in and out, in and out. So that means that you're going to have to be in and out, in and out, in and out. Nobody is not, whereas back in 2019 or 2020, it was a certain group of crypto that people were focused on. Now it's going to be like a ton of things that people are going to be focused on. So that focus is going to get like diversified on an exponential realm, right? With the exception of maybe something like Bitcoin, which is going to be the place that people are going to store their money for long term. So that's when I was like, okay, that's the game. That is the currency game right now. The currency game is compound trading and then preserving your money through something that's an appreciating asset. One of those appreciating assets is Bitcoin. So that's the game for me. But going back to this trade, I want to check out, since I had an alert, 2 alerts go off. I had Swift go off. So I'm thinking it's going to go up to this 50% area. It might even go, it's going to, at some point, going to have to retrace. So I'm going to just put an alert to up to this 38% level. And then I'm going to, let's see. So I did this major little spike thing. Go down to 2 minutes. XL, everything is kind of like, because Bitcoin, you saw that notification, Bitcoin went up, and you see things are popping off. So I'm gonna do it right below this. Put an alert there and see if it's gonna come back down. All right, so XLM, I saw XLM. You look from a higher time frame. So it's in here. I want to see it break. Right before it can break 100%. Since I'm not in it. Now, if I was in it, I would do an alert a little bit lower to try to get in it. See if there's room for me to get in it, but I'm not in it, so I just want to see it break structure. And I think that was it. I'll put one below the 50% mark. All right, so let's go back to Arbitrum and go down to the 15-minute. All right, so now let's see if this alert can go off, and I'll just kind of babysit this one by the alerts. The other thing I was going to mention, this is why I love parallel channels versus just trend lines. So, like, for instance, somebody texted me. When I originally drew this trend line, it was like this. Because I was connecting this, and I think it was this, right? But you see how it came out of there. So what I'll do is go into here and go 0.25 above that and see if we're still in that trend. And look at there. Boom. We're pretty much still in that trend. So I knew that was just a liquidation. So the alert just went off. So it's still going up. That's why I love parallel trend lines, then channels, then trend lines, because it helps you to see, are you still in that area of trending up, or whether you're trending down. Now, and I typically, as I showed in the other video, typically catch the support and resistance area for my parallel channels. There are times where I will catch the whole thing in a channel. So, like, for instance, like this. All right. So sometimes I'll do that. And the reason why I'll do that is because it just makes it less messy, and it's a little cleaner look, and I can see when we're still working our way down or whatever, or working our way up, and it's a smaller, I guess, trending area. Whereas this, like if I go to the higher time frames, this is a bigger trending area, right? It's coming from all the way down here, all the way, and it might go to all the way up here. Whereas this was just a small, like, it was a retracement trend, right? So I might use a parallel channel for that, where I cover the whole thing. For here, where I have a bigger area of trending, then I'm just going to catch the support area of it and the resistance area of it, if that makes sense. And I don't have to like extend it on those little ones, right? I can do short and then just maybe extend it out a little bit. Boom. Right? So, but I can get rid of it because I don't need it. But I'm just trying to show you how I can use it. The other thing I use this for is alerts. So I have an alert on this right now, and the alert is entering the channel. But like, since it's no longer entering, it's out of the channel. If it were to come back into the channel, then I know it's coming back in where it could be heading out. Like it could be heading, like right now it's outside of the channel. I put an alert for entering, so when it comes back in, I know to look and check things out. Let's say it's in, and I want to know when it's exiting, whether it's exiting this way out or exiting this way out. That's why I love parallel channels over trend lines, because there's way more usage for them than just a regular trend line, but it's serving the purpose of a trend line, if that makes sense. So we're going to see, let me see if so it's about 11% if it can hit that, what do you call it, 23%. And let me add this. Let me see if it can make it past the 38% line. And then hopefully it can make it all the way up to the 50%. So maybe I'll do like, come like midway, put a limit order midway, right? Once it passes the 38% line, I'll probably put in a limit order. Now, let's say somebody might be like, well, what if it went all the way up to here or past there and you missed out? And I could, but I might not put a limit order depending on I see how it's moving, because it could just start moving real fast and I'm like, no, I'm not gonna I might go ahead and put the limit order to right up here, like where it like even where it topped out, right, and get the 66%, or go in between, see if I can get maybe 20%, or like right above it, 19%. That's good. That would be good. So it depends on how it's moving, right? And I'm okay with taking less than what I could have maybe gotten out of it, because I got some out of it. I hit my goal, because it's all about compound trading. It's not like this one hit wonder. As long as I meet my compounding trading weekly goal of 20 to 30%. So I've already made, did I make a trade earlier? I think I did make a trade on Monday, I think it was. So like, that's all I care about. That's all I care about, right? Like, I don't have to like hit it all the way of where it's going. To me, that way of thinking is a way of lack. It's kind of like, it's a mindset of lack. Like, oh, I'm never going to get another opportunity. So if I don't hit exactly where the very top of it, then I missed out. And that's, to me, a mindset of lack. Whereas I have a mindset of abundance. And because I have a mindset of abundance, I know even if I gain some of that win, like if the win was, let's say 25% and I came out at 15%, I feel still abundant, because I know there's another trade to be had. I won 15%. I gained 15% with doing hardly any work. There's another one coming. So like, it doesn't end. So like, that's why I can feel like that. Like, I'm okay with not catching the whole trade. As long as I hit my target, I'm good. So that's pretty much it. So this is where we'll see how long it takes. It might take. That's another thing. I think a lot of traders, they don't have the patience to wait for a trade to play out. Let it play out. Like, the most it's gonna be is a day. If it is a day, that people have such short attention spans is mind boggling to me. Now I understand when the old saying, patience is a virtue. It really is. It's a real, like, skill. It's like gold when you can have patience. It's like you've gained wealth by having patience, because wealth is it comes, money comes, cash flow is fast. Wealth is, you build it, and it's a slow build. It's a journey. Cash flow, yes, you need speed. Wealth, you need patience. And the fact that you have patience, you have gained wealth. And that's the way I see it. So, but that will do it for today. Hopefully we can get this. I'll come back to see where the trade ended on the next video, or I might do a short or whatever. So I hope you guys got something out of it. Thanks. Have a great day.